Hey, Alex again. This is chapter 4 example, a chapter 4 example, and we're just doing a small problem on closing entries. So this is what you do to close out the books for the end of the period. So this would be after the adjusting to bring stuff up to date. This is to close the books so that the next month you start fresh and you can start the process all over again. So we close out all the temporary accounts. So revenues and expenses get closed out to the capital account, whatever the capital account is. And this will increase or decrease our capital account, which that's where the net income goes. If we have a net income, it raises our capital account. If it has a net loss, it lowers our capital account. So here's the problem. After the accounts have been adjusted at October 31st, the end of the fiscal year, the following balances were taken from the ledger of Gold Gate Delivery Services Company. Okay, so this is our information. Natalie Clinton capital is at 800,000. Natalie Clinton drawing is at 125,000. Fees earned is at 700,000. And then we have wages expense, rent expense, supplies expense, and miscellaneous expense, each at 400,000, 75,000, 16,000, and 5,000 respectively. And so we got to journalize the 4 entries required to close the accounts. And so this is where the acronym comes in, READ, which means revenues, expenses, income summary, and drawing. So that's the order we close things in. And I'll show you how it works. So fees earned is normally a credit, so to get rid of it, we debit it for 700,000, and we credit the income summary. And now income summary is a temporary, it's a holding account. So we close everything to the income summary, and then we take it from the income summary and put it into the capital. So it's like a middleman account. As you can see on the ledger or the T account, it used to be 700,000, but then we debit it to get rid of it, which zeroes out the accounts. That's what you want. You want to zero them out. Okay, the next step is the income summary account, which will debit for all the expenses. So all those expenses we just saw, the rent, the wages, the supplies, the miscellaneous, we're going to credit them because they're normally a debit, and we're going to lump them into income summary and debit income summary for 496,000. And if you can see over here, each of the T accounts for the expenses used to be a debit, bam, bam, and then we credit them to zero them out. So now they're all zeroed out. And we come down over here. Now we got to do the drawing. Now we have to close out the income summary. So after we found out how much is left in the income summary, because remember we credited it to put the income in, and then we debited it to put the expenses in. The difference between these two leaves a credit balance of 204,000. So then we know we have an income because we have a credit balance left. So then we debit that, and we debit that because then we credit our capital account. So our capital account would now be $1,004,000, because 800,000 plus 204,000 is $1,004. So that's where that entry would go. And so that way we zero out that account. And here's the entry. So we debit income summary for the leftover 204,000, and we credit Natalie Clinton capital for 204,000. And then, bada bing bada boom, our last entry is the drawing account. So we're going to come over here. We're going to debit the drawing. Oh, whoops, my mistake. This should be credited. So we're going to debit the capital account, credit the drawing account. So this is just flipped around. But as you can see, the drawing is normally a debit balance. So to get rid of it, we're going to credit it. and it's going to lower our um, capital account. So our capital account is going to go down by another 125,000. So as you can see, this information, we can condense it into 4 journal entries. That's basically the 4 main closing entries are the revenues, expenses, our income summary, which is our holding account, and then our drawing account, which is last. So just remember, I can switch this out actually really quick, just to show you. There we are, see capital, and that's drawing. See? So we credit the capital, and we debit the capital, credit the drawing, because to get rid of the drawing we have to credit it, because it's normally a debit. And that's how you do it. That was practice exercise 4.4a, closing entries. I just wanted to show the basis of it. I could do a little bit other examples on that chapter. So if you have any questions, feel free to comment or ask, and I'll probably be doing a chapter 5 example next. So thank you and good day.